Everyone is telling you at the moment that the Australian property boom is officially dead. Not only are they looking at the Sydney and Melbourne property markets going backwards, but they're hearing about the RBA increasing interest rates again. But while the average investor is sitting on the sidelines waiting for a crash that may or may not come, the smart money and our wealthiest clients are moving into the second wind markets.
That's exactly right. Now, we're not talking about the markets that have been absolutely booming like Perth and Brisbane and Adelaide. We're talking about the markets that have been catching a breath. Places like Melbourne, Geelong, Mornington Peninsula, and even Ballarat. These markets where the fundamentals really stack up. We've got massive population growth, massive infrastructure spending at the moment, and an awesome history of property performance. These markets have the potential to have a huge run in 2026.
In today's video, we're going to show you exactly why we believe that the average investor is getting it so wrong in 2026. We'll be breaking down the markets where you can still buy incredibly high quality property close to the city and close to the beach in that 650 to 750k range on the east coast of Australia. These are the markets that have absolutely smashed it in the last 18 to 30 years, but in recent times, while Brisbane, Perth and Adelaide have been going off their head, everyone in the country's forgotten about.
Now, to kick things off, if you could just give us an explanation as to what is a second wind market.
A second wind market is not a crappy regional mining town market. A second wind market is actually a high quality market like the likes of Melbourne or the Mornington Peninsula or Wollongong that has underperformed relative to other places in Australia in the last 10 years.
So we've seen many parts of the country increase by over 100% in the last 10 years and absolutely crushed it, like Perth, Brisbane, Adelaide, as well as the major regional markets like the Gold Coast, the Sunshine Coast and Newcastle. But then there's the other areas that have really underperformed in the last 5 years, the likes of Melbourne and Geelong and Mornington Peninsula, Bendigo, Ballarat and even Hobart, the markets that never saw that post-COVID crazy boom.
So for investors like you and I that can't stomach buying a market that was 100% cheaper just 3 to 5 years ago, but want to continue to invest in high quality property with great fundamentals, what makes a perfect second wind market?
Well, as you mentioned before, we're not talking about cheap properties in cheap areas where there's low population levels or low economic diversity. So no small regional towns with no population growth. We're talking about these bigger markets where you've got 150 or 300,000 plus people that already live there and are seeing massive levels of population growth. Also in these areas where there's huge levels of public and private infrastructure spending, where they're upgrading that community, putting in hospitals, railways, new roads, all of these projects that are adding a huge level of economic benefit to those areas.
So I think the biggest thing to wrap your head around when looking for these second wind markets is it's not chasing mining towns or bespoke little villages out there across the country. It's just looking at Australia's biggest metro markets, Australia's largest regional markets, and then handpicking the ones that have got great long-term growth but have underperformed recently because everybody was interested in that shiny thing that was going up extremely quickly somewhere else in the country.
Now, we all know Ben's a bit of a data nerd and loves to dive into the details. So let's get into it. What are Australia's second wind markets and what areas do look really attractive for 2026 onwards?
So for me, out of Australia's capital city markets, I really like the look of Melbourne, Darwin and Hobart. Although as an investor, I'm more of an East Coast big city guy, so for me it's more of a Melbourne pick. Now the reason for this is according to Cotality, over the long term, over the last 30 years, the price difference between Sydney and Melbourne has normally on average been about 29% difference, with Sydney more expensive. But right now, according to Cotality, it's about a 60% difference. And when we're looking at suburbs, in the middle ring suburbs of Melbourne versus the middle ring suburbs in Sydney, there's almost 100 to 125% difference in prices in Sydney's outer and middle rings versus Melbourne's outer and middle rings. So that looks phenomenal. So just to put it into context, for example, if you're out there and you're looking at should I buy Perth or Brisbane this year versus somewhere like Melbourne or Hobart this year, for example, if I look at Melbourne over the last 30 years, according to Cotality, up until 2022, house prices in Melbourne went up by over 519%, versus house prices in Perth over the same time going up by just 324%. Now, for me and Simon, over a 30-year period, if I could make 300 or 500% on anything I buy now on leverage, happy days, like show me where to put the cash. But what's even more important than this is the last 7 years. So when we looked at Melbourne in the last 7 years, effectively prices on average across the city went up just 25%, versus prices in Perth over the same time going up over 99.73%. So in the last 7 years, Melbourne has underperformed Perth by about 75%. But in the last 30 years, Melbourne has outperformed Perth by over 130%. So these are what second wind markets are. They're the places in Australia where nobody's looking, where the most value in the next 10 years lies. But obviously, as my little brother, what are the little markets in Australia around the country doing at the moment?
Little markets, yes, 5 million to 300,000 is a big differential, but I do love our regional towns around Australia. Now, I'm not going to talk about any of the tiny little regional markets, but I'm talking about the major regional markets, those that are within a 1, maybe 2 hour drive of a major metro market in Melbourne or Sydney and Brisbane, where you've got lots of different people that live there. So once again, to provide a little bit of context, over the last 18 years, the Gold Coast has seen property prices increase by 219%, whereas a market like the Mornington Peninsula, property prices went up by 236%, which actually blew my mind when I read that. But if you look at the last 7 years, the Gold Coast property market is up over 107%, whereas the Mornington Peninsula has increased by just over 31%. So while both markets have done exceptionally well over the last 18 years, in the last 7, the Gold Coast has outperformed the Mornington Peninsula by over 75%.
Now, I completely get the way that I'm feeling and so many investors like yourselves are feeling out there at the moment. Like, the world is actually quite pessimistic, and there's been some seriously intense things happening in Australia and overseas at the moment that are, like, from a values-based perspective, like rocking humanity to the core. Like, I think we can all say that things aren't perfect, and we're not absolutely happy with some of the leaders around the world and the current state of affairs taking us away from some of the things that we love and fundamentally believe in, not just investors as humans, things like financial freedom and choices and becoming your best self and living the life of your dreams and helping other people and being kind to other people. But I diverge, because at the end of the day, regardless of how you or I are feeling, the market at the moment is very much down on sentiment, and we've seen that for a number of years now. Basically since interest rates started to go back up with the cost of living at the same time, and it's just been hard, not so much for all Australians, but for many Australians. On top of that, we've got fears at the moment about interest rates going sideways and not down like they said they were going to do for the last 18 months. I feel like I've been sort of strung along with a carrot saying it's coming, it's coming, it's coming, and it might not be coming now. We might be seeing rates actually go up later this year, who knows. On top of that, the inflation numbers, as we all know, have been completely cooked, and the basket of goods has been completely modified to the point where we're reporting inflationary numbers of 2 to 3%, but they might be as high as 10 to 11%, which I went shopping last week and I didn't walk out of the shopping centre for under $700, and I didn't even do a full week. I'm like, what the fuck happened? It seems to be across the board. Sentiment is low. Prices are going up fast as well. So not only is the top end of the market growing at the moment, but capital cities like Perth, like Adelaide, like Brisbane, other regional markets like the Sunny Coast and Gold Coast are on fire. In fact, when I look at the daily indices and the quarterly growth over the last 3 months, Perth is on track for a 30% year right now based on the last quarter. Brisbane and Adelaide are both on track for a 20+% growth year, as is the Sunshine Coast and Gold Coast. So stuff is going up. The bottom of the market is creating pressure because the Australian government is wanting more investors to come in and more first-timers to come in, and they want more people to be using these grants that they're giving out at the moment, and it's driving the bottom, which is driving the middle, and it will come to the top. There's major uncertainty at the moment. Are we going to be in a crash soon? Are we not going to be in a crash? Where are we in long-term real estate cycles, and what's really going on with our leadership around the world? And then on top of that, I've been feeling massive FOMO because I just missed 200% on silver. I want to try and get it on something else. Now I'm looking at copper. No, I'm just joking. Simon missed the, Bitcoin run from 20 grand to 120K, and now we're trying to chase our tails like so many other investors. Every time I pick up the phone, I'm talking to an investor that just made 500 grand in Perth. And it's like, would you rush back into Perth that has done 100% in the last 5 years? Or do you take a punt on somewhere like Melbourne that's only done 25% in the same time, but historically has kicked ass? And so it's not just FOMO, but there's also this two-stage approach to property and this fear in the market of, did I miss the boat? Should I rush in and buy anything? Or should I take a step back, consult advisors, work with people who are obsessed with the data and use data to make all decisions moving forward? And I think that's what a second wind market is. It's a second opportunity. Okay, I missed Perth, I missed Townsville, I missed silver, and I missed gold. I missed the stock market since the start of COVID. All of them have done over 100%. It hurts, but I'm not going to miss the next second wind market just because Perth has done 100%. Doesn't mean that Melbourne or Wollongong or Hobart or Darwin has done the same numbers. And so we now have a second opportunity. Regardless if the crash is coming or not, buying the undervalued markets is the way to do it.
The beautiful thing about investing is there's always another opportunity around the corner. And we've been doing this for a long time now, over 12 years, full-time studying the Australian property market. And we've seen that money move from Sydney to the Central Coast, to Newcastle, to Wollongong, to the Shoalhaven, to Brisbane, to the Gold Coast, to the Sunshine Coast, to regional Queensland, to Adelaide, to Perth, to regional Western Australia, to Darwin, to back to Melbourne. The markets are constantly moving, and it's about understanding how to identify the undervalued locations, how to follow those fundamentals. And whilst there is a lot of headwinds, there is a lot of negative news out there at the moment, and that's completely valid. I'm 33 years of age. I've got a long career ahead of myself, both with my work and also with my investments as well. So I'm taking a 30-year picture. I'm taking a 30-year time horizon and trying to change my life for myself, for my family, and for the people that I surround myself with. And at the end of the day, there is a lot of positive things happening here and now. Predictions coming out from SQM, from realestate.com, from Domain, from CBA, you name it, everybody expects 2026 to be a positive year for the Australian property market. We've got mass immigration at the moment, whether you like it or not. That is bringing in new people, creating more demand, keeping vacancy rates low, and keeping average days on market really low around the country. There's a massive infrastructure boom happening in Australia, but on a global scale at the moment as well. So a lot of our natural resources are being sent offshore for those global infrastructure projects, as well as our local infrastructure projects. And there's plenty of jobs available at the moment. We've got low unemployment rates. We've got high average household incomes at the moment. So whilst there is a lot of headwinds, there is a lot of uncertainty and fear, there is also a lot of positive things. And there's constantly going to be people pulling you in one direction or another. I think it's really important to develop that conviction for yourself, to do the research, do the work like you are right now watching these types of videos, and then go out there and take educated action in those undervalued markets with a long-term approach.
So if you, like myself and Simon, are thinking about maybe dabbling this year, maybe looking at some of these second wind markets and letting go of what we missed and moving forward with our futures, then we would love to offer you a one-on-one strategy session. To book that session, all you have to do is go to www.pumpedonproperty.com, click that free strategy session button. We can talk about where you are right now. We can talk about where you'd like to be longer term. We can share which markets are completely cooked and overvalued with you and which ones are significantly undervalued based on long-term history right now. You can take that information, which is completely free, and you can take that information and go and absolutely smash it completely on your own. Or potentially we can talk about how you can become one of the extremely small number of clients that Simon and I take on every single week. But either way, we truly wish you all the best on your journey throughout 2026, and we're excited to see what happens at the end of the year.
It was all a dream.